filing status. Um, so the tax burden is not shared equally uh, by different types of people in the United States. Uh, this first chart shows what would be the effective tax rate if you are a single earner and you are earning the amount shown on the x-axis of the graph. For example, if you are earning about 20K per annum, your effective tax rate would be about 20%. At 40K per year, your tax rate would be somewhere about 26%. And this keeps rising all the way to about 38, 39% when you earn 100K, and then remains essentially flat. It rises, but it rises so slowly that we can say that it's pretty flat all the way up to 250, and then rises only marginally if you're earning 400K. Uh, if you are a married person, but you are the sole earner in the family, the graph looks similar but with some key differences. So let's look at that graph here. As you can see, the effective tax rate is almost always less than what it would be for uh, a single person. Uh, you should note that this is a effective tax rate for married people when there's only one person earning and the other person is not earning anything. As you can see at the bottom of the pay scale, the effective tax rate is about 15%. It rises smoothly and it keeps rising even after 100K. The rate increase tapers down a bit, uh, but even at 250K, the rate is about 35%. For comparative purposes, at 250K, a single earner, single tax filing is paying more than 5% at about 40%. So the third case that I have considered is that of a person, of a couple who's where both people are earning. And that case can have very different tax dynamics. I have shown all the three cases here in this graph. Let's see. Uh, let's see if I can fit it correctly here. I think this is as good as it gets. All right, so as you can see, up till about 120K, the effective tax rate paid by married people is same, whether uh, it's a single earner or double earner. But beyond that, their fates diverge. The double earners end up paying a lot more tax, and ultimately they approach the tax rate of single tax filing guys. This happens primarily because the double earners have to pay more Social Security tax. Uh, in the end, I'm going to show you the methodology that I have adopted to calculate this. There are a couple of tables. I'll walk you through just the first table. Okay, so this table shows the effective tax rate for married, sorry, this is not the first table. Effective tax rate for single earner, single tax filing. The first column shows the income. The second column shows the federal tax. The third column shows the Social Security, and all these amounts are annual, not monthly. This is Medicare. This is state tax in California. So if you are not in a high income tax state, probably your calculation will be different. This is SDI again. It's specific to California, but your state might have something like this. When you take out all this amount, the net take home for the person is about 16,880. Next column is interesting. What I have done is that to the income 20,000, I have added the tax that employer pays for Social Security and Medicare. It would be unfair not to add that because remember, we are calculating effective tax rate here. So what I'm doing is that I'm asking myself what would happen if the government had no tax at all. And in that case, I would be getting 21,540. Because there are taxes, I'm getting only 16,880. And so the effective tax rate would be calculated by calculating the fraction that 16,880 is of the total 21,540. And that figure comes out to be about 21.6%. At the bottom is the income 400K, and the effective tax rate is 43% in this case, which is pretty high, as you can see. So not just the marginal rate, but the effective rate is also very high. And the reason this is high is that I'm including Social Security, Medicare, and state taxes in this. Similarly, I have made tables for married but single earners and married and double earners. And as you can see, their tax incidents are pretty different. This final table gives you the specific figures for 3 different cases. These column titles are not very clear, but the first column, second column, and third columns are respectively for single tax filing, double tax filing, single earning, and double tax filing, double earning. Thank you.